p.m. Nigerian time. Thank you very much for joining us. It's Tuesday edition of Your Business Nigeria. Here are the top stories we are tracking for you at this time. Nigeria's external reserves drops by $427 million as Nigerians dump naira for dollar amidst cash crunch. NNPCL distributes 1.8 billion liters of petrol in 2 months as Asian shares total dollars rally pulses as federal the Fed queues is high at the moment. Well, on our interview segment today, our conversation will still stay with the persistent scarcity of new Naira notes with a view of assessing all contending issues, economic implications, ripple effects on businesses, and of course, the banking industry. 2 economic analysts from ZCAP Partners will be joining me live to discuss this topical issue as we chat the way forward. Welcome. Let's bring you through some news making headlines across the world of business. Latest data from the Central Bank of Nigeria reveals that the country's external reserves fell by $427.14 million in 1 month. The Apex Bank's data also shows that the reserves fell to $36.79 billion as of end of February 16, 2023, from $37.21 billion as of January 18. Despite the RT200 FX program aimed to boost forex supply in the country through the non-oil sector in the next 3 to 5 years, external reserves experienced a slight slide. Now, this development is as a result of a worsening crisis over the scarcity of the new Naira notes. The Nigerian Employers Consultative Association also noted that the cash squeeze has greatly impaired the purchasing power and the rail sector witnessed about 40% drop in productive activities. Well, as part of concerted efforts put in place to sustain the supply of petroleum products across the country in order to forestall the re-emergence of queues in the country, the Nigerian National Petroleum Company Limited says it has 1.8 billion liters of premium motor spirit, popularly called petrol, in stock, which will last for 42 days. In a statement issued in Abuja, NNPCL reveals that it has sufficient volumes on land and is expecting 2.5 billion liters next month. To sustain the supply of petroleum products nationwide, the NNPC Limited has also in place a robust plan for the supply of premium motor spirit from mid-February to March 2023. It, however, assures Nigerians of a continuous availability of petroleum products across the country. Well, while the cash crunch being experienced in Nigeria persists till now, causing unbearable hardship for citizens and businesses, monetary and economic experts say the situation could lead to a host of negative unintended consequences, which may hit the deposit money banks very hard. Following the recent attacks and destructions of bank facilities, the Association of Senior Staff Banks, Insurance and Financial Institutions has revealed that commercial banks have lost the sum of 5 billion naira or more across the nation from angry and frustrated Nigerians who could not have access to their funds. Well, reacting to this development earlier on the show, that was yesterday, Mr. Robert Omotunde, who is the Chief Investment Officer of AfriInvest West Africa, and Mr. Tajuddin Ibrahim, Director Research and Strategy, Chapel, expressed their views on the lingering Naira scarcity and its economic implications. Take a listen before I bring my guest in.
Means through which that is done. But I mean, for us, is to analyze the economic impact of this. And you can see how this is economically impacting on the lives of people in a negative way, by the way. Because those who are, engaging in cash transactions, we've had reports of people who have had to shut down businesses, for the period because they could not transact in cash. And the way it's so bad that, if you want to get something from, a vendor and you do not have cash and that vendor does not have the means to get it through alternative means, it then means that you cannot transact business. So definitely, this is having a very negative impact on the small-scale businesses. And I'm not sure that the federal government is not aware, neither is the central bank oblivious of the negative consequences of, this policy in terms of how it affects the common man on the street. And I think that's why they keep, they've kept, I don't know whether it's apology now, they kept, sensitizing people and letting them know that the government understands the challenges But I think that the government is a bit serious about pursuing this policy for whatever reason. But they definitely must be aware that it has negative impact on small scale and medium enterprise. And then, of course, the ordinary man on the street who actually doesn't have much. Maybe all he has is actually 2,000 naira in the account, and he cannot even access it, given the level of poverty in the country. So I think those are the areas that are actually very painful in terms of how this policy has come across.
All those threats are significant and they are, largely speaking, unfortunate. And in my view, they are avoidable. And, in my mind, it speaks to, a way that the central bank has not really, well implemented, its policy. That policy, when it came out, cashless policy, I think those that really understand how the financial system works, they like the policy, and everybody, was, largely speaking, supportive of that policy. But the downside, is the implementation. So I think, we could do better in terms of implementation. The second and probably the more important thing is that, it will be useful if Nigerians can understand that, those assets that are being destroyed belong to Nigerians as well. They do not belong to foreigners. If you are damaging such assets, what it means is that, we are even inflicting more injuries on ourselves in addition to whatever policy, impact we could be feeling as citizens. So my mind is that, we should, as Nigerians, be patient on that front until when all these issues are resolved.